Hey everyone, hope you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to do our daily technical analysis, updated commodities, work our way through the dollar, yields, precious metals, and commodities ETFs that I follow. I'll interject my financial opinions as we go through it. And if you need help with anything, check out finding-value.com. That's where I dive deeper into all these subjects, looking for potential investment opportunities in the markets and sharing that with everyone in the community. We do have a special going on. Special is the coupon code, 50% off the first month and a larger discount on the yearly membership. Let's dive in, take a look, see what's going on today. We've got a weaker dollar, DXY. We had a nice setup here to move higher, but we definitely got turned in the opposite direction the past two trading sessions. I do know that Trump and Bessent want a weaker dollar and they want lower yields. Not saying how they're going to get there, but we've definitely got a trend reversal. We have a breakout to the upside that reversed quickly to the downside these past two trading sessions. We are now starting to get through the first stages of this support area, which is right at this top here, and we're starting to eclipse that support, and we'll see if the dollar falls further. Every single time in history, we've had a topping of these dollars here, here, and here. They've all been commodity bull markets, every single one of them. This one was the 1970s commodity bull market. This was another well-known one in the 2000s that really took off in 2002. And there was another surge from 84 down to about 87, which is this big decline there in the ratio during that time frame. It's not as well known. And here we are potentially at the beginning of maybe a weakening dollar, which will prop up or move anything that's priced in dollars. We've got the 2-year yield still continuing a little bit lower today. It does have a reversal candlestick, and we'll see if there's any sort of upward pressure and what that pressure looks like. If I were to guess, we've got a downtrend, and we're probably going to see small little up candlesticks like that with the potential of a rollover eventually. We've got the 10-year yield putting in a larger reversal candlestick. This is a bullish piercing candlestick today, where it gapped lower in the morning and finished above the 50th percentile of the one before it. Now we have to see what kind of follow through do we have. Is this a potential bottom where we were just overdrawn out of this pattern where we start to move on upward? Or is it a breakdown where we go and retest underneath and turn on over? We don't know. We'll have to wait and see. And then the 30-year also putting in a bullish engulfing candlestick, which generally breaks higher. And there's the big pattern there, the 3-hump consolidation, the breakout to the upside. This could be a return, a retest return move of that big consolidation breakout where we move higher, potentially. When the 10-year and the 30-year move higher, generally oil moves higher with it. Oil's generally been the driver of it. Some people think that oil is going to go down. Some people think oil is going to go up. Difficult to say here. Looking at the TYX-TNX ratio, we are up 0.5%, but we lost some momentum throughout the day. That momentum resulted in a candlestick with a big wick at the top. So momentum is up, but we could have a potential reversal, and we'll have to see what that looks like, where we could invert this ratio again. Usually when you come low to high, that's when gold goes up. Gold's been going up since these circles. Bond prices are down 1.22%, and that's where yields were going up on the long end. Are we going to turn? Are we going to power through and continue higher? I don't know. We'll have to wait and see. If the market is strong, I would expect this to go down, and this is a breakout, maybe return move of some sort. If the market's weak and we're going to go into a recession, then yeah, we could easily go higher and break out of this resistance support area that all these people were buying and selling in. The 2 and the 10-year is breaking down. That is Pretty big move. So the 2-year was down 0.3% and the 10-year was up 1.42%. Could the curve uninvert with the long end going up and the short end coming down? Possible, yeah. That's what the 2 and 10 is showing. Most of these, or basically all of these, uninversions have resulted in recessions, slowdowns or recessions. So that's what we're looking at in history, and this is where we could potentially be going. And we've broken out of this uptrend to the downside just recently. Gold's up $28 an ounce. Kind of a weird looking deal going on here. I just threw that in there. We can also take it out. We do have stronger selling pressure through here, a bearish engulfing there, and a weaker bounce. That is something to note, and a lot of the times they roll over. Silver is up 0.71%. We're still sitting on top of everything and still looks bullish on the longer term. And yes, I've got this line going across here. That's the yearly closing line that was on there. If we were to put it back up, we could do the 12-month yearly close, and that's where this line was down here. We're breaking through that line. And some people say, well, man, the lines don't align. Well, that depends if it's logarithmic. Some of these charts I draw on log, some of them I don't. And then some of them I also put on different closing candlesticks. This is a 12-month, and that's where I drew that one before. And that still looks good if we get a closing on that. Platinum, we're back within the pattern. We're still squeezing up. Everything still looks good to break higher eventually. Still looks good. Palladium down $5 an ounce. We are back to support and bounced off that support yesterday. Now with a little bloody nose, and that generally works its way on up. We've got GDX up 1.44%. We've got GDXJ up 1.65 and SILJ up 0.8. They're all very similar, with SILJ being lagged behind the gold mining companies. GDXJ, the juniors, are sitting on top of the pattern, and GDX is further along and has already broken out of its big flag pattern to the upside. So that looks good. We've got XAU divided by gold, which is moving sideways today and right at support at a very cheap location from a ratio perspective of gold and silver mining companies versus gold. Crude oil basically trading flat today. We traded down throughout the day and reversed higher. We'll see if there's any sort of follow through. I know OPEC is going to slowly bring on barrels in April, and we'll see what kind of impact that has. There's a lot of people who watch the equities, they watch a lot of stuff, and they are incredibly bearish on oil right now. So we'll see what kind of movement we get in oil here. I am still in the camp that we are in a big bull market and that this will eventually work its way on up after whatever slowdown we're going through ends. And we very well could do a little tail on this and a washout sale before going higher. That is completely and utterly possible. And that's this is the end of trend kind of washout sales there. We could even get one here before heading higher. These here were also, this was the '08 crash. This one here was a massive massive supply increase from shale. And this one here was the C19 event. So could we get another event? Could something happen? It's totally possible. But I do think that we'll eventually work our way on up, given how this has broken the structure here of the consolidation. And these are all interconnected with way more data than what I'm showing you here. It would take hours and hours to show you all of the data to support that opinion. TTF gas, we've pulled back 5% today. We're back to that bottom end of the channel, and we'll see if it holds. Natural gas in America, much higher, up 5.7% and sitting on top of support of this channel that we've got. So we'll see if we can break away and move higher for natural gas. Our boy XOP, yeah, you know me, we are Slightly down today. We had a lot of selling pressure these past couple of trading sessions, today and yesterday specifically. And I think that deals with OPEC. There's a lot of negative things around GDP, and it pulled us on back. Now, is this going to be sustaining where we really drop out, or is this going to be temporary where we turn and head higher? I'm in the camp that this is a shoulder, head, shoulder. I'm in the camp that this here is our fractal, that we could dip a little bit before heading higher. It'll be a washed out sale. It'll get all of the retail investors on the wrong side. They'll sell, and it provides volume for the big boys to pick up a bunch of shares. OIH also down 1.75% today. This one does not look all that great. We have broken to the downside of this upward channel, and we've been chopping sideways. We've recently put in a new potential low, and we'll see if that sticks. If it doesn't, we better get back above it. There could be follow through, and we'll have to see what that looks like. Could that roll over? Newcastle Coal Futures up 0.63%. And we've got the base here, the breakout, and then the retest. So I do think it's a retest. Even if we drift a little bit below the support and go back down into that area, I still think it's a retest. It's based off of the combination of knowing thousands of charts and lots of data, from real estate cycles to construction employment to the commodity to stock ratio to the valuations of all these, the equities and the S&P 500 and NASDAQ. It all paints a picture. The valuations in commodities are still incredibly cheap. That's part of the cycle. Sprott Physical Uranium Trust, we've got the big base here. We've broken out of the base, and we now have a large flag pattern. We're at the bottom of the flag pattern right now. And it was up 0.4%. Uranium futures pricing chopping sideways. We've got URA up 2.38%. We still have downside pressure. We'll see if we can turn it here over the next few trading sessions. URNM up 2.5%, but the momentum is still to the downside. It has not turned yet. URNJ up 3.5%, momentum still to the downside. It's trying to turn, and we'll see if it is successful or not. There's your turn on the very short term. And we'll see if we can break basically back out a little bit there, back out a little bit there. We'll see if we can break this downtrend. It's not a very easy looking downtrend, so it's kind of sloping downward like that. Copper trying to break out to the upside at the moment. We were down 0.73%, and there's the upside trying to break out to the upside. COPX up barely, basically a flat day today. Momentum is still to the downside. We've got iron ore down 1%, looking like it's doing some sort of retest move here. It's been chopping sideways. Generally, in consolidations, you'll see the consolidation contract to nothing, and then it will turn higher. So the sellers are leaking out of this thing, and I do think it's going to turn higher. Aluminum, right underneath resistance, hasn't broken out yet. We've got a nickel moving sideways up 0.4%, but looks like it's trying to break to the upside here. We've got MU, which is down 1%, and we're still within this pattern here, but it still looks good. Again, this is your consolidation from 2008. Your consolidation from 2008 in your real estate cycle is your recovery phase. We went into an expansion phase here, and we've pulled back with home sales coming down and credit contracting. Fiscal spending's been holding this thing up. I do think this is going to eventually work its way on up after this slowdown is behind us. The slowdown started in March of 2022. We're still in that slowdown. And that goes for all of these charts. They're all like that. Emerging markets, it's the same thing. We had a breakout here in 2020. It was going to run. They raised rates dramatically, caused this to pull back with the stronger dollar. This is dollar and interest rate sensitive. And now we're consolidating here, and I think we'll go back up when the dollar drops. KRE down 3.5%, looking a little bit more ugly, back on support. TAN's up 2.5%, trying to find a bottom but can't. We've got lithium down 0.67, and this is a good setup here, in my opinion. We've got to move higher and then consolidation sideways with some big bullish engulfings. That looks good to go higher with time. REMX up 0.8%. It's holding on. We had a nice break of the downtrend line here, and we're still chopping sideways after breaking out. Kind of a retest, almost double bottom going on here to some degree. We got the Baltic Dry Index continuing higher. This was the bottom, and this was an incredibly good entry point for those looking. And we're moving on up. XHB, home builders down 0.81%. The momentum is down. We've got a break here, created a low. We have a lower high, and now we have a lower low, which is creating a new downtrend in the home builders. And we could be heading more towards this support zone at 85. We've got Russell 2000 down 1%, and we're on support, momentum to the downside. The S&P 500 is down 1.22. I drew a line through there. We're back at that support region. We'll see if it holds and if we'll create a new lower low. That's something to watch. And the NASDAQ also down 0.35%. We're definitely have momentum generating to the downside, and we have created a lower low. That could be in the beginning stages of a topping process, maybe. We've got SMCI up 8.5%, but the momentum is still to the downside. That hasn't turned yet. It's trying. NVIDIA up 1.6%. That looks like it's starting to roll over as well and could potentially break this support, creating a lower low. Bitcoin up about 3%. It's holding steady or trying to at the moment. Some good support right there with all those wicks. We've got Ethereum also up 2.2%, getting some support right there. Sometimes these do bottom roughly in the same location. Bigger picture view, momentum is still to the downside. And we've got good support through there going across. That's why we're getting all those wicks on the bottom of the candlesticks. MicroStrategy up 10% today, back within this pattern, kind of. But we've got a battle going on there between the buyers and the sellers. Today, the buyers are in control, trying to regain control is what I'll say. And then the VIX, it's popping up out of this. We could do a little run here to the upside where the S&P 500 sells off. So that is something to watch, is the VIX, the Volatility S&P 500 index, and the S&P 500 very close to a potential breakdown. This is the beginning rotation of a commodity bull market. So what happens is you enter an expansionary phase of real estate, which we did in 2020, 2021, in that general time frame, where you break out into an expansion phase where you're expanding above the normal housing starts. We go to an expansion phase, you start to see homes being built everywhere. They raised interest rates dramatically because they put stimulus on top of this, which is very inflationary because credit being created, monetary credit creation from the banking system is inflationary. And then they put a bunch of stimulus on top of it. So they raised interest rates very quickly. That definitely slowed down the housing market, definitely slowed down home sales. That's what one of the things that we are watching. And then housing starts have eventually started to kind of creep and roll over as well. If we start to go below the average, which is USHT, we start to go below here about 1.2 million. That's generally when you get these recessions. And I'm sure all of these are recessions, all of them. This is your 2007-8 crash. Your 8 crash occurred down there after it went below the average. This was 1969. This was 1974, 3-4. This is 1980. And then also 81, 82. This was 1990 recession. and then the recession here is 2007. So if we get below this, there's a possibility of a recession. Um, this fractal looks very similar to this, and if you look at the data that backs all this, household formation, where we're at in the millennials demographic, um, it shows that we're still short homes quite a bit. We were not short homes in 2007. We overbuilt massively, and the demographic did not support that. We had lots of foreclosures and forced selling pressure. There's a lot of things that people on Twitter, they don't really talk about or maybe don't understand, but that's kind of where we're at. This is generally where recessions are driven from. It's about, I think there's only been a handful of recessions that were not driven by the real estate market in history. And this is what is driving us. This is very important. That's why I go over real estate. A lot of people are not interested in real estate. I don't know why, but that's where your recessions are generally driven from. The one recession that wasn't driven was 2000, and we could get a recession that is similar to 2000, but it's not a great financial crisis. It's not a deleveraging event or anything like that. It's not a huge blowout deleveraging crash. But that's what I've got for today, guys. We'll end it there. I'll be releasing a midweek update here for Wednesday if you're a member, and you can see my opinions there. But give me a thumb up for the content, subscribe to the channel, and we'll catch you guys next time. This is Finding Value.